All right. So the first one, can I lose all my money?
I assume this is in response to the market volatility that we're sort of seeing at the moment. So I guess like all great answers, it starts with a depends, right? So depends on what it is you're referring to. So if we're talking about someone who's invested in, say, one of our portfolios, one of our client portfolios, that's been constructed very specifically with a very detailed and specific philosophy in mind, or a very broad-based, well-diversified. Let's take the market. Let's say we use the index as a default, right? So if we said, okay, well, the ASX 200, has gone down. I think peak to trough is almost sort of 40%, depending on where you kind of measure it from. But so if you think about what that means, it means the prices of mostly the largest companies, but the prices of companies have dropped, because that index is essentially the sum of for each individual company's market capitalisation, and their individual capitalisation is simply the price multiplied by the number of shares issued. And the price is the last price that the shares were traded for, so what was actually sold for. So if you think about that from a mechanical point of view, someone might have, the last trade of yesterday may have been 1,000 shares in, say, CBA, for example. And so because 1,000 CBA shares were sold at, I don't know, $60, whatever the price was, that sets the price. That's the close for the day, whatever the last trade was. And so that sets the price for all other shares. Now, there's about last I look, about between 1.7 and 1.8 billion CBA shares. And so whatever that last volume was sets the price for all of those other shares. So for you as a shareholder to go broke, what has to happen is the company itself has to, its liabilities have to exceed its assets. So it's got nothing to do with share price. If it's got bills to pay and doesn't, like any small business, if it can't pay its bills, it now goes broke. And therefore it has to sell the assets to meet those creditors. So let's say CBA can't meet its creditors because it can't trade anymore. Home loans default and people can't. So CBA's gone broke. Then the shareholders don't get any money back until all of the notes holders and debt holders and all the higher ranking security holders in CBA get paid out, and then the shareholders. So they're always last. They have the highest risk, if you like. But CBA as a company, a trading entity, has to go broke for the shareholders to essentially be at risk. If CBA, the share price can go down to anything, right? But as long as CBA has money to trade, home loans and credit cards and deposits and all those sort of things, and continues to operate, then the price of CBA shares is irrelevant in terms of operation. It's a bit like saying my local cafe closed yesterday for 6 months. So it's going to have no turnover. What's the value of that company? Well, arguably, a company that's not trading is probably not worth anything. And therefore, if you sold it off and had the assets or whatever, sold off its coffee machine and whatever, then, it's probably not going to be worth very much. But if they come back in 6 months' time or a month's time, whatever, and they start trading and they suddenly they're profit again, then the company's worth, whatever that profit is kind of worth. So the fact that, at the moment the shares in that cafe are probably worth nothing because you don't know what it's going to be worth in the future, it doesn't mean that as an entity it's gone broke. It's able to meet it's got no bills to pay, or it's paid its bills up front, whatever. As long as it can continue as a going concern, it's fine. So if you then extrapolate that to the whole market, well then how does the whole market go broke? If I own the index, say the ASX 200, that's proportionately I own the top 200 companies. Now I don't own an even amount of each one. I own a lot more of the big ones and a lot less of the smaller ones, but I own a portion of all of them. So for me to go broke, all of those companies have to become insolvent and not have any assets left to pay shareholders after other creditors. So let's say that's possible. Let's say they're all heavily geared or whatever it is and they don't have any real assets. Now, people like BHP and Woodside and some of those companies probably almost certainly would, but so that's where you get into things like the book value of assets and those things. But let's assume that they don't. What's the likelihood that the biggest 200 companies in Australia all go broke on the same day? It's never happened, right? And if it did, Woolies is gone, Telstra's gone, all the banks are gone, BHP's gone, Rio's gone, they're all gone. Never happened before, anywhere in the world. So it's our compliance people would say I'm not allowed to say that that's not possible. But your super is the least of your concerns.
Right.
So my view is it's an event we don't even cater for. It's that beyond the realms of possibility. Now, could the profitability of all those companies be massively affected? Possibly. So we might say, well, this is an economic event. It's not just a market thing. It's an economic event. And so the market's dropped 40% for a reason. But if you were to say, well, the market was reasonably priced before that, and there's a reasonable argument to say that wasn't too bad, for that to be right, that pricing now to be right, what you'd have to be saying is the economy's taken a permanent 40% hit. That's really what the pricing is telling you. I think that's extremely unlikely. You know, maybe it's taken a 10% hit or 20% hit, or whatever the long-term effect of that is. It might be almost zero in the long term. If we go back and we look at historical events, that's certainly the case. There's a hit and it does make an impact. It's not zero, but it's not 40. But in terms of can it go further in pricing-wise, it can do anything pricing-wise. But losing your money, that requires the entities themselves to go broke. And that's just all but not going to happen.
Right.
All right. So as long as we have a society, as long as we have companies trading between each other, then the recovery will come. The question is when and how long and those sort of things. That's a very different question. But in terms of going broke and losing all your money, not really.